Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals. Gold prices continue to rise, actually continuing to consolidate at a higher level than we're used to. We're seeing between 1325 and 1345. The market has seemed to have found a home. We've seen little trades up to 1345 and maybe some small trades down below 1330, but we are finding a home here as the market consolidates after a big move we saw since just before DCEF back in mid-December. The market has really been on a tear, and now we're just kind of waiting for that next moment that will take the market either higher or pull us back into that old range. Very similar to what we're seeing in treasuries. The big move higher in yields in treasuries are now consolidated. We're seeing the same in gold, seeing that big price ascension. Now we're waiting for the next it moment. And if you look at the dollar continues to fuel a lot of this gold pricing. The dollar, after ending 2017 on a down note, has opened 2018 on that same down note. And we are continuing to see struggling dollar positions, whether it be because of government shutdowns, which have now passed, or whether it has to be good with government decision-making processes, or whatever it is in Washington, the Fed. It's not working, and the dollar continues to suffer. And I think that is going to help continue to fuel gold. And recall that at some points of last year and in 2016, we saw the dollar rally and gold rally at the same time, which is rare, but we do see it. This is not one of those times. We are seeing the dollar get hit pretty hard, and it is only helping with gold. And then lastly, if you look at positioning, we talked about last week, positioning spec longs continue to add. That is helping to fuel this rally. And if you look over on the other side of the aisle at the cryptocurrencies, which have just been getting crushed, it's been a rinse trade, that is also fueling, I think, a lot of this positioning, because bad positions in cryptocurrencies are lending themselves to new positions in spec longs in gold. So I think that right now that those two markets, while we did see a lot of the cryptocurrencies rallying very quickly and very fast, they went up without a whole lot of information, a lot of uncertainty as to why they were rising. I think the same is on the way down, and some of that money is being moved out of cryptocurrencies and back into gold, where it can be a little more safe, despite the fact that we don't really have a firm grasp on what's going on over there, other than regulatory possibilities from the government, which nobody in crypto land wants to talk about or hear about. So gold prices continue to ascend in a consolidation mode, but likely to head higher as we head through the week. We have some central bank meetings in Europe and in Asia. Likewise, we have GDP number coming out on Friday. That will be heavily watched, but it is ultimately about the dollar, and it is about the Fed. And I think right now the Fed is pretty well priced into the market. Gold prices right now don't reflect 3 to 4 tightenings, but they do reflect 2 to 3 tightenings, and that's what's priced into the market. So gold prices likely on the way higher from here. This is Todd Colvin coming to you from the floor of the CME Group.